Greetings, members, one and all of the Salivation Nation. Platinum is waiting in the wings, but it could be the last metal to break out into a performance of a positive direction. So let's explore. Yes, indeed. This article here from Seeking Alpha was shared with me by Coins A to Z, who is a platinum bull, kind of like me. I do feel like platinum could potentially break out in due course, but it's waiting in the wings right now. We have to kind of just be patient and see what happens. There's a lot of different things that are going on and a lot of different catalysts, pun intended there, that could cause it to really greatly increase in price. And we're going to cover some of those here in this article from Seeking Alpha, and then another article here later, which is kind of some interesting news indeed. So the Granite Shares Platinum Trust is the sort of the market that platinum is kind of evaluated here. PLTM has continued to move higher towards the second quarter of 2020 max targets of $9 per share, reflecting a broad base appreciation in the precious metal space. They expect platinum to be the next precious metal to follow a catch-up phase after silver. And in reality, silver is just back to where it was before all of this began with COVID-19. I don't think silver has broken out yet, but I think it's poised to do so, at least to narrow some of that ratio between gold to silver. I believe it won't break out until we see a normalization of the gold to silver ratio, at least to the levels that we saw before, the low 80s. But nonetheless, gold initially led the pack in the first quarter, and due to its better liquidity, safe haven characteristics. Silver has begun to outperform since the start of the second quarter, but again, I qualify that with what I said before. Given the increased price divergence between platinum and gold and silver, they think that this is time for platinum to enter its outperformance phase. And here we can see the three different metals here, and platinum is still kind of hovering here at the bottom due to performance here. Let's actually enlarge this chart. You can see here with the numbers here and where they are at. Gold has been the steady performer, and I tell you what, even since January 20th, it has really done very well. Gold has. The tight supply backdrop due to supply disruptions in South Africa, combined with a possible rebound in auto catalyst demand as lockdown measures are being eased in most economies, could bring platinum prices still higher in the near term. That said, we stress that the rebound in PLTM is unlikely to be sustainable considering the bearish posture of platinum's fundamentals in 2020 as a whole. Consequently, we expect renewed weakness in the fourth quarter in light of platinum's negative seasonal patterns. And so, for the second quarter, they forecasted trading range of $6 to $9 per share of PLTM. Translate that to the actual spot price of platinum. But nonetheless, it was created in January 2018, PLTM was, and it was directly impacted by the fluctuations of platinum spot price because the funds physically holds platinum bars in London Vault and custodied by ICBC's Standard Bank. The investment objective of the Granite Shares Platinum Trust is to replicate the performance of the price of platinum, less trust expenses, according to the official Granite Shares website. The physically backed methodology prevents investors from getting hurt by the contango structure of the platinum market, contrary to ETFs using futures contracts. And that's pretty interesting. Also, the structure of the grantor trust protects investors since trustees cannot lend the platinum bars. PLTM is the lowest cost ETF in the market with an expense ratio of 0.5%. PLTM competes with the Aberdeen Standard Physical Platinum Shares ETF, which was created 10 years ago, which is, however, the more expensive considering its expense ratio. So there it is. It's interesting speculating on that, and the article continues here about getting into the minutiae of that and how the net spec length has materially declined since the start of the year to the tune of 2.2 million ounces. This represents 27% of annual platinum supply. So anyways, it goes on and talks about this specific position, but I want to talk about more of the metal itself. And that is here, Johnson Matthey refuses to forecast a refined platinum market balance due to the extreme uncertainty about fundamental dynamics. I think this is important. In the latest Platinum Group Metals report, Johnson Matthey acknowledged that both supply and demand for platinum will be significantly impacted by the COVID-19 shock, but elected not to publish forecasts due to the quasi-impossibility to quantify changes in supply and demand as a result of unprecedented health crisis. On the supply side, JM expects mine output in South Africa to contract by at least 20% in 2020. The impact of lost production is likely to be the greatest for platinum and rhodium, while palladium being somewhat less affected. And that's interesting indeed, because platinum has taken somewhat of a hit, but it's also still up. And I think that if we start to see that retooling of catalyst for gasoline engines to platinum again, this could be a game changer. So far that it hasn't happened, but South Africa being one of the major mining supplies, as well as Russia, that is still going to have a great effect on the demand and the supply chain, which has always been kind of an issue even before COVID-19. So in addition to the COVID-19 outbreak, Seeking Alpha article continues, South African supply will be hindered by the prolonged outage of Anglo American Platinum's converter plant. This came after an explosion at its Phase A converter plant in February, which led the mining company to declare force majeure on March 6th and temporarily halt refined PGM production. On the demand side, JM expects a steep fall in autocatalyst demand for platinum for 2020 because of the shutdowns, to the tune of 21% compared with 2019, based on current auto industry forecasts, which are likely to change markedly in the course of the year. To wit, auto industry forecasts allow for a contraction of around 20% in annual light vehicle production this year, with output of diesel vehicles in Europe particularly badly hit, and production of gasoline vehicles in some Asian countries less severely affected. Based on our current estimates of regional leveraged PGM holdings, this would imply a decrease of 21% in autocatalyst platinum demand compared to 2019. There we see it. Wow. And which obviously is translated to tepid prices. So PLTM continues to move higher in the closing thoughts towards the target of $9 per share, validating our near-term constructive thesis. We expect the rebound in PLTM to continue a little longer due to persisting supply disruptions and a likely acceleration of autocatalyst platinum demand due to a recovery in automotive production. So that is interesting. And then they stress that the platinum market is likely to post a significant surplus this year, which could lead to renewed weakness in platinum in general and PLTM specifically later this year. We're therefore cautious for Q4, especially considering the negative seasonal price patterns in the final quarter of the year. That being said, platinum is waiting in the wings, but it is poised for takeoff because of things like the acceleration of the autocatalyst platinum being used as an autocatalyst and potentially retooling from the very expensive palladium, which is double what platinum is. And if that continues, they will probably work to shift and change, especially if there is a surplus and if they can get it at an even cheaper price for industrial uses. But then you're saying, well, Sal, what happens when we move away from internal combustion engines and have no need for a catalyst to clean the air. Well, that's right. This brings me to the second article here that was just published yesterday. Platinum giants enter the battery space in due course. That's right. So now that we have the potential for prices to go up due to demand for retooling for platinum to be used for auto catalyst for internal combustion engines, but batteries for battery powered vehicles and storage in general, platinum will be entering the battery space in due course. This could be the catalyst for a takeoff. Again, this shared with me by Coins A to Z. Despite the rise of electric vehicles, platinum group metals still have a good 10 years in front of them. In an entry by the world's largest producer of platinum, Sibanye-Stillwater, into the battery space is planned in due course, said CEO Neil Froneman. Froneman spoke to Kitco last week. Sibanye-Stillwater timed its entry into the platinum group metals space directly by picking up discounted platinum assets in the mid-2010s. Stillwater, which was spun out of South Africa's goldfields in 2013, picked up Anglo American's Rustenburg for $95 million in 2015. It also purchased South African platinum miner Aquarius for $294 million in 2016. Palladium and rhodium were some of the top performing metals of the last decade due to tighter automotive emission standards. In 2016, palladium traded as low as $550 an ounce. It ended the decade well over $2,000. Froneman said Sibanye-Stillwater will record a production hit in the second quarter due to South Africa's COVID-19 restrictions. Froneman said mining activity was reduced from the beginning of the second quarter and into the month of May. Fortunately, Stillwater operations in Montana in the U.S. were declared a strategic and an essential service because the platinum they produce is for medical purposes. Interesting. Sibanye added the Stillwater mine for 2016 for $202 billion. Froneman is proud of the Sibanye-Stillwater's bets as entering the areas of the market that are counter-cyclical. We've done a lot of work in terms of supply and demand fundamentals. We made sure before we made any moves that we understood the market and where the medium to long-term demand was going to be. Of course, we have to do very good due diligence on just about every company in this space. Palladium and rhodium have been in greater demand due to their superior role in emissions reductions, thus the leap in prices for both metals. We felt it necessary to get the PGM sector back into balance, so we have sponsored research with BASF into what we call the tri-metal catalyst. There's potentially a real shortage of palladium. Rhodium is in an even worse position. Froneman says that he expects substitution to happen sooner rather than later. There you go. Again, the theme carries on. Platinum is waiting in the wings, that especially with Froneman making this prediction that substitution will happen sooner rather than later. Regarding the threat posed by electric vehicles, which don't need PGM metals for catalyst, Froneman said internal combustion engines will still be around for a while, and I agree. Part of our strategy is to enter the battery electric metals space in due course, but from a PGM perspective, the gasoline internal combustion engine has a good 10 years in front of it. I agree with that as well, and I think this is all very good and positive news. So you want to talk about being patient. Being patient with silver is one thing, but I believe with silver, but especially platinum, is greatly undervalued for these reasons. So I agree with Coins A to Z on this, and I want to thank Coins A to Z for forwarding these two articles to me to review. And this is why this channel is called Salivate Metal, because I love all precious metals especially, but you know what? I'm a fan of copper too, and tin and nickel and the other metals. They're pretty cool, but I really like platinum for its density, its hardness, its lack of reacting. It does not tone, it does not tarnish, it does not spot. It is what it is. It's an amazing metal. It is denser than gold. It is hard. It is rare. It is cool. I love platinum. I'm smelling a little. It doesn't have any smell to it, too, just like gold doesn't either. But boy, it has a sound. You're hearing the sound of it right now. I have a piece here that I keep, a Canadian maple leaf. And it's just a great metal. So there you have it. Post your thoughts below. I would like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.